Hey, Bulls and Bears, it is Monday, July 26th, 2021. Thank you for being here. We've got some news to cover today, and some very interesting things are starting to unfold, things that we've covered here in this channel. But we know that the central banks, the money printers as we call them, we've also called them the monopoly men, because it's essentially monopoly money that's being printed that people take as having value, even though it's just paper. But it really distorts the economy. It distorts markets because anytime you create unlimited amounts of currency, or what some people would call currency, other people would say that it's monopoly money, it can really be used in very dire fashions. And this can distort markets. It can cause the price of living to go high, as we've seen here over the past many years. Costs are inflating. Most people have to live under some sort of debt now. Most people, at the end of their days, sadly, are still in some sort of debt. And it's become a small portion of the population that's actually debt-free. But it's to the point now where, in many cases, you have to live under debt to even have some sort of roof over your head. And if you look at a lot of people that are debt-free, those are the people living in tents in many cases. All right, so pretty crazy times. We've never seen this level of market propping, this level of money printing out of the money printers. We see that the policymakers are passing new bills or looking to pass new bills, including the massive stimulus bill, the infrastructure bill, and a lot of the policymakers acting like this is something that's going to fix the problem. Now let's take a look at this first article. This is what's going to transpire here across the nation, but it's starting to be more easily recognized in a few states, and that's the states where they're cutting off the extra unemployment benefits. Let's take a look at what's happening in those states. And this was a survey that looked at 10 states, and we see the blue line. In the 10 states where the extra unemployment benefits were cut off, and this was just recently in mid-June, those states are seeing lower initial jobless claims. And if you look to the right here, those states are seeing lower continuous unemployment claims as well. All right, now we've never said here that the enhanced unemployment benefits was the only factor in why people are deciding not to take these jobs that are open, and there's over 9 million job openings right now that people are not taking. That's just part of the puzzle. You have a lot of factors here. You have the childcare situation. A lot of parents, they can't go to work now. You have people that are afraid of getting ill because the sickness is still out there and it's getting worse in some cases. And I know some people say it's not serious, but it is serious. My neighbor was coughing up blood for about 2 weeks and was on death's door at the hospital. So it's a real thing, regardless of what some people might try to tell you. But I do think that this situation was exploited as an excuse for the bankers to keep printing, for the stimulus to keep going out, keep interest rates low, and all of the things that have to be done to keep this debt-based economy from imploding. Let's take a look at what's happening with mortgage rates. Mortgage rates nosedive towards all-time lows as refinance fee is ended. Right now, to anyone watching this, you knew this was going to happen. This is the only way forward: is lower rates, more liquidity, more debt, raise the debt ceiling, more borrowing, more spending, and more pretending. That is what our economy is based on, is debt. Recent article out of Politico: the Fed weighs curbing cash machine. That's a good name for it. Money printer, cash machine, as critics warn of housing stock bubble. Okay, do you really think the Fed is going to be able to pull back on the cash machine, on the printing, and not have this entire bubble economy implode? This is the biggest bubble. This is the everything bubble. A lot of economists that I listen to that have been in the game way longer than myself call this the everything bubble. All right, and we're talking economists that have been in this game for 30, 40, 50 plus years. All right, many economists and investors alike. All right, so look at the headline of this article. Do you really think the Fed is weighing the idea of curbing the cash machine? All right, we know what's going to happen if the Fed does that. They will be the obvious cause of the economy when it collapses. So we don't think they're going to do that without some sort of excuse. So we think that they'll likely wait for something to happen. Others are more suspicious minding and they say they're going to make something happen. That way they have the excuse to pull the plug on the cash machine. But either way, it doesn't change the fact that we need to prepare for a reversal. And this could take a while. It could happen next week. It could happen next year. Nobody knows. And here's what most people don't realize. It could never happen. Right? A lot of people have the view or thought process that what goes up must come down. Home prices are up. They're detached from reality. They're detached from incomes. They must come down, etc. A lot of people think that the stock market is way overvalued. It must come down. Well, take a look at the countries that went into hyperinflation. Things went up there and never came down. Why? Because they never stopped printing. Right? They never stopped the inflationary measures that led to these higher prices. And I would like to hear an interview or hear from someone that knows exactly when they're going to pull the plug, but I don't think anyone knows. All right, and I listened to a lot of interviews, and as I said a few minutes ago, a lot of economists, a lot of investors, financial gurus, etc. Nobody knows. All right, there have been very famous economists predicting a reversal and a correction and a downturn for years now, many years. Just search the term market crash. You'll go all the way back to probably 2015, 2014. People were talking about a double dip recession coming out of the financial crisis, right? But when recessions are steered and engineered, and when economic booms are steered and engineered, you have to know exactly what the intentions are of the people behind the wheel of the cash machine, right? The money printers. But here's something pretty interesting. Speaking of money printers, take a look at this article out of Kitco. Brazil's central bank buys 41.8 tons of gold just in the month of June alone. Right? So if the cash machine, again, the money printers, if they were planning on a deflationary event, if they were planning on a market correction or falling prices or initiating a crash by pulling away support, would they still be buying gold? And I know this is Brazil's central bank, but central banks around the world, if you haven't noticed, have been pretty similar in their policies. It's more debt, lower and lower rates, more borrowing, infinite support for the banks, endless purchases of mortgage-backed securities to keep the housing market propped up and keep everyone in debt. So again, let's ask the question, and maybe you can let me know down in the comments. So if central banks were planning on a deflationary event, why would they be purchasing gold and hard assets still? And we've showed you a lot of different central banks continuing to buy hard assets. So again, if they're seeing deflation, if they're going to let the system crash and deflate, why would they be holding hard assets? You let me know. In the meantime, you may want to start bracing for this inflation to continue. Link below to get some silver. It's SD Bullion. It's the place that I get it. Fast shipping. It's free shipping if you have a minimum order. Link down below. Keep stacking. Keep preparing, everybody. Thanks for being here. Bye for now. Peace.